All right, folks, in this video, I want to explain why I am still bullish on this shiny little metal right here called silver. Now, we've seen a pullback recently in gold and silver, but to me, this is another buying opportunity. I've been happy to pick up all of my silver sub $30 per ounce, and I've been stacking silver exclusively with plans to eventually start stacking gold as well. But I've been starting out with silver because I think that there's a better opportunity in the short term. But obviously for long-term wealth preservation, gold is going to be part of my portfolio as well. It's not one or the other, it's both. It's just I'm getting started in precious metals. I've only been investing in the space for about 2 years. And like I said, I've accumulated all my silver under $30, kind of like I was accumulating most of my XRP under 30 cents. And then XRP started to go up, and, you know, I've been dollar cost averaging and you know, been happy to accumulate that bag under $1, obviously, most of my XRP. But when we talk about silver, right, there's two parts to this for me, which is the supply side and the demand side, right? Simple supply demand dynamics. But when it comes to supply, we're running a deficit. And when it comes to demand, most of the demand right now is coming from industrial use, the utility out of silver, while we're seeing retail investor demand in jewelry, some of those use cases actually drop off. This is an interesting setup. And as always, when we can front run the masses and front run the herd, right, this is where we want to be as investors. And so this is why I'm still so bullish on silver. But let me break down. There's a few other points that I wanted to share with you here in this update. Now, we're going to get started here with the cyber attacks that are continuing and ongoing. This one is the French telecoms operators targeting or have been targeted in an attack. This is French telecommunications from Mario Nafal. French telecommunication operators SFR and Bouygues have been targeted in an attack disrupting services throughout 6 areas of France. Cables were cut in electrical cabinets of these companies in Hérault, Bouches-du-Rhône, Oise, Moise, Drôme, and Oide. And I probably butchered all of those, but I gave you my best shot. There are also 28 reports of problems throughout France after attacks on SNF's fiber optic network. So the systems are being attacked, and it's not just here in France. We're also seeing that the Ukrainians are cyber attacking Russia's central bank. So a little operation underway. Ukrainian cyber attack targets Russia's central bank, reporting from Gold Telegraph, and from the KievIndependent.com is actually the original source. So there you have it, folks. Just to reiterate the point, when the systems go down, what options do you have? Obviously, we've been talking about prepping, having your food, essentials, and all of that's fine and dandy. But I also like having silver in smaller denominations as a way to barter during crap hits the fan. Now, many people say, well, nobody's going to care for gold or silver, right? You can't eat it. We know that, right? We understand that. But I think about, one, hedging against inflation and destruction of our dollar, but I also think about the ability to barter whenever you see fit, whether it's the systems going down or whether it's crap hits the actual fan, right? And I just like having options, like I said, for feeding my family, for providing for my family, conducting trade. When it comes to defending my family, I'm a big fan of the Second Amendment. I like having my options there too, right? So it's just about optionality for me. And so one of my goals here going forward is actually, I was talking about this with my Discord group in our prepping call, is to actually get smaller denominated silver. So it's called junk silver. I don't have any yet, but I'm looking to stack up some here soon. What I do have so far is I've been stacking these 10-ounce bars. This is straight from the Wall Street Mint 10-ouncer. And this is kind of just bang for your buck, right? You're paying less of a premium on these bigger bars because these are more desirable. And these are the 1 ounce. And this is just simple buffalo heads right here, 1 ouncers. And then for my good friend, my dear Canadian friend, Randy, she actually gave me a couple maple leafs here for the little ones, actually, is who she gave these to. So these aren't mine, I guess. These are for the little ones. But huge shout out to Randy up in Canada. She showed up at the Vancouver Resource Investment Conference in January, and she gave me a couple maple leafs. So we've diversified away from the buffalo heads, away from the 10-ounce bars from the Wall Street Mint, and now I have a couple maple leafs. But the next move I'm looking at is some junk silver. That's my personal move, obviously not financial advice. Now, that's just one part of it, right? When the systems go down, what do we have to barter with? I like having some silver handy just in case, as an option. But we also see that it's not unusual for a second inflationary wave to enter, to come back as we're entering a recession. This is from Finance Lot. The wave hits producers hard, and that's in the producer price index, as they're unable to pass costs onto the consumer, which is CPI. This is why there's a sudden surge in corporate loans followed by mass layoffs right before the crisis hits. And so what we've seen here time and time again as we enter into a recession is that producer price index spikes, inflation comes back in a second wave, and it's a fatal second wave for those who aren't prepared. And I'm going to be talking about this in my next video too, about Michael Burry, who was the famous Big Short investor, right? And the other group of guys who invested alongside of Michael Burry, kind of the similar plays, right, in this whole Big Short movie. Their move recently into gold, I find very interesting. So I'm going to be talking about that. Michael Burry's added a significant, Sprott, the Sprott Trust to his holdings. And then we've also seen the other Big Short investors go into, gold as well. And it's, once again, all of the data points take us back to the Great Financial Crisis, the dot-com bubble, and previous recessions, even the Great Depression. We have a lot of data points that match up and line up with that time as well. And so we are going through our own version of that in 2024 here. Are we going to meet the technical recession? That's yet to be seen. But the second wave of inflation, I think, is going to come back regardless of whether or not we hit a quote-unquote technical recession. And silver provides another hedge against that inflation. Now, furthermore, the inflation takes away purchasing power and it removes excess savings, which we've already seen in Americans, the average household. We went from excess savings of over $2 trillion after all the stimmy checks and everybody had a good time and it was a lot of fun. We had $2 trillion in savings, excess savings. That's been completely depleted. And now Americans are having to tap in. And that's why the credit card debt's at an all-time high. And that's why Americans can no longer save money from the Kobesi letter. The U.S. personal savings rate has declined from 3.5% in May to 3.4% in June, the lowest since December of 2022. By comparison, in May of 2023, the savings rate was 5.3%. Excluding 2022, the savings rate sits at its lowest levels since the 2008 financial crisis. Like I said, how many of these data points do we need to see take us back to 2008 Great Financial Crisis before we start to prepare, before we start to stack something else, right? Now, this is about Americans no longer saving. I beg the question, should we be saving US dollars, right? It's one thing to even get to the point of, in the first objective, as I've always said since back in 2022, when I said prepare for a recession, we were in a technical recession, but it was politically incorrect to call it a recession. We didn't want to offend anybody, so we didn't call it a recession in 2022, even though we met the technical definition. But when that happened, I came out and the first thing I said in my recession to-do list is get your income up. It's the only way to, battle inflation. It's the only way to get excess savings. And then what should we save? What is a proper hedge against inflation? Well, for me, part of that has been in silver, right? So once again, this comes after U.S. households, like I said, have depleted over $2.3 trillion of excess savings since 2021. At the same time, the credit card debt reached $1.06 trillion in July, just $3 billion below the all-time record. So we're not at a new all-time high right now currently as I'm recording this, but we just have achieved a new all-time high of basically 1.1 trillion is what we hit, and we're just 3 billion off that. So folks, the point being, folks are tapped out. They can't even get to the point of savings. And then when we do get to the point of savings, do you want to be storing dollars? Well, there's an interesting dynamic that's setting up right now for silver, and I think that we'll see tremendous upside. But gold and silver have been doing their job as far as protecting against inflation so far. But I think that we still have a lot of room to grow, particularly in silver, because it's lagged, in performance this year compared to gold. But I think that we have some catching up to do that's going to come later this year and into next year. But the long-term thesis for silver over the next 5 to 10 years is pretty spectacular when we think about so much of the world being brought online, so much of this fourth industrial revolution and the AI and the chips and the solar and all these new innovations that require more silver, more energy. this all comes back to silver and other commodities that you're going to need to actually achieve these goals. And I'm not even talking about the Green New Deal. I'm just talking about bringing folks online, right? Bringing power to the people. Literally, this is going to take more silver production, and we're already running a massive deficit, which brings me to my last data point that I want to share with you guys. This was put out by Mining Visuals. Huge shout out to Mining Visuals for putting out this little graphic. This is the silver supply and demand dynamics, and this is an incredible little deal that they've put together. In 2023, silver demand outpaced supply for the third consecutive year, with a 30% decrease in the market deficit to 184.3 million ounces. So we didn't have as much of a deficit in 2023, but we still had a deficit that was 184 million ounces. Despite declines in investment, jewelry, and silverware demand, like I said, this is where the retail investors don't get it. Retail has been in AI, retail has been in tech, retail is in crypto. Retail's not looking at this old relic of the past, silver. Despite declines in investment, jewelry, and silverware demand, industrial demand surged. Driven by the solar sector, total demand fell by 7% to 1,195 million ounces, but remained 9% above the second highest level in the series. Industrial demand reached a record high, rising 11% to 654.4 million ounces. The 2024 supply-demand gap is forecasted to increase by 17%. So we will be running another deficit this year in 2024 is what they're forecasting. And as you can see on this chart here, once again, if you look at these visuals, it shows you electronics, solar, net physical investment, jewelry, other industrial, brazing, alloys, and solders, and silverware and photography. Smaller uses, smaller demand. But we have solar driving this. We have other energy production driving this. It's incredible when you look at the amount of silver that goes into Tomahawk missiles. Look at how much silver goes into creating a nuclear plant, right? We're seeing countries in Europe starting to figure out this deal, realizing that they can't rely on Russia, realizing that it's even tough to rely on Ukraine. And so now they're turning to nuclear once again. Well, guess how much silver it takes to, actually create a nuclear plant too. So once again, on the supply side, we're running short. And this is at a time when the demand is being really primarily driven by industrial use. The retail investor and speculator, call us whatever the heck you want, right? There's definitely a little bit of speculation on silver going to a much, much higher price than today's trading price. But right now, this demand has mostly been driven by industrial. Just wait until the retail wakes up. And it doesn't happen, right, until we start to achieve new all-time highs for gold. It's like we're still holding these prices for gold right now well above the previous all-time high. The previous all-time high, we triple tapped off a level that was about 2,050, 2,080, and it was sub 2,100. Well, we've broken above 2,400. We were on our way to 2,500, and then the shorts came in, and we're currently back below 2,400. I don't know how much longer this will last. And even if we do enter a recession and we do get a temporary pullback on gold, the potential for us to actually still hold above that new all-time high shows that there's still significant demand for gold at a time when it's already back at all-time high. Most people don't like buying assets at all-time high. The retail, the herd mentality doesn't pile into an asset till it approaches all-time high or achieves all-time high. That's why gold's still holding so strong. Now for silver, the shorts came in as we approached $32, massive level for the hedge funds and the shorts trying to protect their bags because they're taking massive losses for every dollar that silver increases. And still, we're still seeing a massive short position taken against silver, keeping it suppressed. This is why it's lagged against gold, but they're not going to be able to hold on to this because when the industrial demand is matched by the retail investor demand, this is when silver starts to go ballistic, matched up with on the supply side, still running deficits. So we're already running deficits without the retail investor. This is just driven by industrial use cases. And those are only growing and the trend is only picking up from here for there. But when it comes to the retail finally waking up Retail finally waking up. Oh, wow. My 60-40 portfolio is not doing so well. Oh, wow. The bonds just had their worst year ever. Oh, wow. My money manager, even if my investments are going up, is still taking a 2% management fee on top of a 20% upside, where I could just self-custody this silver, like I always say, utility with no counterparty risk when you hold it yourself. This is when the retail starts to wake up, and it'll be when silver starts to approach. I think that you're already looking at big psychological levels as silver, above $30 starts to get people worried. It starts to get the big hedge funds worried, which is why they put on so many shorts to keep it below $32. They've broken silver back below $28 per ounce as I'm recording this. They've broken gold back below $2,400. And although we might still go lower, I'm taking anything below $30 as a buying opportunity. And I already said, I'm looking at buying some junk silver next. I'm diversifying within the asset per the different denominations that I'm holding. So that's my next move, is junk silver, right? Available for barter, also going to hold its value. This is what I like. Store of value aspect along with the utility. It's a match made in investment heaven. Take my money, especially while we're under $30 per ounce. As always, I'm not here to give you financial advice. I'm just explaining why I'm still bullish on silver. And there's people that are willing to throw a lot larger silver predictions than I am. You got Jim Rickers that's talking about $15,000 gold next year. I'm not willing to go out on that limb, but I am willing to say that we're going to a much, much higher price. I 100% believe in that. And I'm here for the ride. I got my bag stacked. I'm going to try to stack some more while it's on sale. And if you guys are looking to pick up precious metals, well, at my website, zachrector.com, I have resources available for rolling over a 401k retirement account. And I also have options for getting the metal shipped directly to your door. Let's get you saved before we see that second wave of inflation, before the systems go down. I want you to have options. I want you to be hedged. And most of all, protecting your wealth during a bout of inflation that's not going away, despite what the mainstream media, despite what the Fed wants to say. We know that they haven't won the fight against it. We know it's going to be coming back no matter who gets elected. Now's the time to prepare. While they're beating up silver, while they're shorting it, while they're giving us these opportunities, I'm going to be taking advantage. You guys let me know in the comments down below if I, missed any other reasons. I'm sure there's plenty more why you guys are bullish on silver. Let me know in the comments down below. I'm excited to hear from you guys as well. Everything's at zachrector.com. If you appreciate these updates, please make sure to like this video. Help me out by sharing it out far and wide. And I will see you guys in the next update. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.